Hello and welcome to Pro Trader Strategies market commentary for Wednesday, November the 29th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Not a whole lot of economic data, albeit if you looked at the calendar, it looks like there's quite a bit of stuff on there, but there's not really a whole lot of economic market moving information across the pond for sure. But we did get Spanish flash CPI, came in at 1.6%, expected to be 1.7%. And French consumer spending month over month came in at a negative 1.9%, was expected to be unchanged. They did revise last month's number up slightly from 0.9% to 0.1%, but that does not make up for what we saw in the last month's reading. Then we have OPEC meetings all day today. Basically, there's going to be all kinds of rhetoric coming out of that. That could be very market moving for crude oil, albeit it hasn't really moved a whole lot today, as you can see on the chart. And then we have Fed member Dudley speaking. It seems like all the Fed governors are out in force lately. And then Janet Yellen speaking in front of Congress. She's testifying in front of Congress. U.S. side, we got preliminary GDP quarter over quarter came in at 3.3%. That's gross domestic product for anybody who is under a rock, I guess. And then we got pending home sales came in month over month at 3.5%. That's really reflecting what we saw in the new home sales. So that did quite a bit better than the 1.1% expected. And last month's number was revised slightly down to negative 0.4%, expected to be or it came in unchanged. And finally, we got crude oil inventories coming in at negative 3.4 million barrels. That's a drawdown, expected to be 2.5 million barrels. And then the beige book came in, beige book comes in at 2 o'clock Eastern. So that's one I actually like to look at. It's a pretty good indication as to what the Fed is looking at. They get a couple of other economic indicators. But the beige book is the one that is public. They get a couple private ones that should closely be reflective or mirror what beige book is showing. All right. So keep your eye out for that. Not a lot of people look at it, but beige book is the one that the Fed governors are looking at. And that is one of the major ones that is going to be determining rates. So keep your eye out. On to crude oil, like I mentioned, down slightly by about 16 cents, despite the fact that we got bigger than expected draw down by about 900,000 barrels, almost a million barrels. We did get a bit of a bounce there earlier on, but I think more people are more concerned about trying to catch up with this rally in the equities, so it's not really getting the money flow coming into there. Gold futures coming off quite a bit today, down about over 12 points. Remember, I talked about this. Anytime we get the levers and pulleys going, we've got equities blasting off. That should hurt these go-to products for safety, and this one it's a flight out of safety in a sense. And same thing we're seeing here in the bonds, down over a point right now, really coming off. That's helping out our TLT or my TLT trade that we have on. That's actually gone back into positive territory. I have positive P&L on that finally. That was a loser almost right off the bat, but we got this move, stayed with it, and it's starting to look pretty good. Dow Jones Industrial Average, here we go again with a broken record, you guys. New all-time historical high, up quite nicely, even after yesterday's big rally at the end of the day. Korea did a couple of missile launches. That didn't affect the markets. They aren't really looking at it. Now, NASDAQ really getting beat up, but this is really due to the tech sector getting pummeled. stocks like NVIDIA. Remember, I talked about NVIDIA with this cryptocurrency thing. Everybody's talking about Bitcoin going to 10,000. But they were going to be moving to the cloud. So a lot of these techs are really getting beat up. So NASDAQ really getting pummeled today. So I decided to go into some of the tech stuff and add a few, or I'm looking at adding. I haven't gotten filled on anything yet. So, but I am looking at this being a little bit overdone for the NASDAQ. We got the E-mini S&Ps up just slightly, almost unchanged at this point. I am going to have to keep an eye out on this because this could look as like a top. It's not looking like it so much in the Dow right now. NASDAQ being negative, this being looking very toppish. So keep our eyes out for that. We might need to start adding some negative deltas to our portfolios. Onto the daily chart of the E-mini S&Ps, you can see it's really blasted off on the economic number, but then just a big sell-off. I think this is more along the lines of profit taking, but we're going to have to keep an eye on this because tomorrow, if we get confirmation to the downside, that could be the correction everybody has been talking about. And since not a lot of people are talking about it, that could be the time to see a sell-off. All right, on to this. This is what I was talking about with the financials. I talked about this yesterday with financials doing really well. Today, we're really seeing Visa get beat up. And if interest rates are going to continue to increase, then that's going to help out Visa. Plus, we're going into the Christmas season. I think a lot of people are putting stuff on credit cards. We've seen this in the wages. Wages aren't going up very much, but spending is. And when you see that type of scenario happening, guess what? That means people are putting money on Visa. So Visa has come down to this support level. I've added some long deltas with Visa by selling this. You know, you can see that the volatility really spiked on this. So it's got above 50% IV on this. And so I went into the January and sold the 100 puts for 51 cents. I did that only in my margin account. I haven't done anything in there for my my IRA. But with my IRA, having said that, I did add Philip Morris to the upside. It's been kind of trending in this little area here. It's tested this value area. I think that Philip Morris is going to have a turnaround. I don't smoke or anything like that, but you know, Philip Morris always seems to have a consumer out there. So I think that this could move to the upside. And so I went into the January and I sold the 90 puts and then defined that risk by buying the 65 puts and did that for 30 cents in Philip Morris. So $90 puts me way down here below this Fibonacci level. So I'm happy with that. I've got two support levels. I don't think it's really going to go down that far. And if it does go down to the 90 strike here, you can see that that would act as a stopping point for that and would hopefully get those to settle for nothing. Might have to hold that to the end of the day if that's the scenario that starts to happen. But sorry, I have a puppy in the background that's having a nightmare. And then in my IRA, I did the same similar situation where I went into the January that was in my IRA with a defined risk, but in my margin account, sold the 90 puts in January for 35 cents. So followed my rules on that defined risk synthetic short with the Philip Morris in my IRA, did the defined risk for a nickel. As cheap as I could get it for the most part. And then finally in AIG blasting off to the upside also. They've come off these lows. Now AIG has been a lagger in this financial. They haven't had as much of a move as the rest of them. And while the rest of the financials have been creeping higher, AIG was coming off. So I think AIG has some catching up to do. So I added some long deltas in here by buying some calls because you can see the volatility is relatively low. It's below 50 IV% and it's starting to creep up there. So hopefully if it continues to creep up and I get directionality, I'll be able to achieve a nice profit rather soon. So in AIG, I went in there and did the January, bought the 62.5 calls for 71 cents. That's all I've done today. I know that's a mouthful, but needed to get some stuff together and working. If we start seeing a bit of a break tomorrow, I'm going to be looking to add a lot of short deltas in just about anything I can put my hands on. So keep your eyes out for that as well. And then Friday, we are going to be doing the long call spread. So hopefully we're not getting too much of a correction before I get this webinar off, because I'd like to have some ideas as to what we can add. There's always something out there that can be added to a portfolio, even in a down market. There's always something that is going to have a flight to safety. Maybe it's gold or something like that. I don't know. We'll have to see on Friday. But that's all I got for you guys today. If you can't take that, take it easy.